Welcome back to the next exciting edition of Markonomics 101, presenting Hoot Loot, the place for education, information without fabrication. We tell it like it is, and we're going to tell you a hell of a story today about what's going down in the world that you probably haven't heard about yet, but it's not too early to take advantage of it. It's called Inflation Nation. So if you want to be informed, not misled, keep on listening because you're going to learn an awful lot here. History does repeat, and sometimes it rhymes. But right now, there's a lot of it going on, and you're going to learn an awful lot here. So tune in. And here we go with the charts. Now, the Dow Jones Industrial Average, as you recall last time, a couple of days ago, I said, look, it looked like a head and shoulders. It looked like it was going to curl over and die. Well, there was one caveat to that. The caveat was if it makes a new high, all bets are off. Well, I guess for the standpoint of the prediction, all bets are off because it made a new high. I circled it in green. And what you're going to see is that the market just did the most really out of the most, statistically probable things, but it does add up to something really interesting that I think is going on now and explains not only why we missed it, but what's going to happen now that we've seen it and how you can benefit from it, because you definitely can. So that's the Dow, broke out, just went completely ape, new high. So it was no longer in that downtrend, and we no longer say, well, highs below highs. No, not anymore. So this thing is at a new high. And basically, that's a bullish pattern. It broke out of a bullish formation. It's going up. And that's surprising. But you know what? We're not going to fight the market. Market's always right. My ego's always wrong. And I've got to learn that the market knows much more than I do. And I've got to pay attention to it. So here we go. All right. So the next chart is the NASDAQ 100. NASDAQ, again, it broke through its rising trend line. It looked like it was also had a pattern of highs below highs and all that. Well, it's now, I would have to say, it's in a bullish pennant pattern. Looks like it's going to break out. The interesting thing is that it hasn't actually hit a new high. It will, but what's important is the reason it's not hit a new high yet is because technology stocks are rotating out. In other words, they were where the action is. They're no longer where the action's going to be. That doesn't mean that they're not going to go up. They might, but they're really kind of done going up. And it's other things that are going to go up instead. And those things are going to be commodities. We are ending what's called a financial paper cycle and entering a commodity cycle. And a commodity cycle is a long cycle that you can make a lot of money, but you don't want to hold paper. Okay. So this one's going up. It's just not going up as much. I still wouldn't be really thrilled about buying into it, but that's just me. Okay, here's another one, which this is the small market or the small market cap index. It's called the Russell 600. These are like the 600 small cap companies. They're worth about roughly $200 million each. I know that's small cap. It doesn't mean much to you and me. It's kind of chump change, but they form an index of them. This broke out too. Now, this thing, again, what we said was if this thing hits a new high, it was lagging the market, hits a new high, all bets are off. And it sure enough did the last couple of weeks. The election, was very strange in, at least from my standpoint, in how the market reacted to the election. I'm going to have some thoughts on that in a minute because it hasn't really acted the way people expected. That part isn't weird. What is weird is what it seems to be saying by doing what it's doing. So let's keep going here. And this is the S&P 500. Again, broke out to a new high. Okay, sorry, I was wrong. That's where we basically admit it. We get out. We say, okay, pack up the bags, go back to cash, wait for another opportunity. So, transportation index. No one taking airplanes, but this one's going up anyway. I don't know why, but again, a new high in the transportation, a new high in the Dow. That triggers a Dow theory buy signal. The Dow transportations and Dow industrials are now at new highs. And actually, I don't want to call them industrials. I realize that's very insensitive of me. They are the transgender Americans. So as a result, I want to be very sensitive to people's feelings, but the transgender Americans are doing incredibly well, and they should be very happy as an identity. So let's move on here. Apple Corporation, I've kind of thought, again, it sort of looked like it was in a pattern where it was going to break down, and others were in head and shoulders, and these were bad patterns. Believe it or not, this thing's going up, or it looks like it to me now. It started to break down in the last couple of days. It started to go up. Again, I'll tell a little bit more about why some of this stuff is going on as we move down the road. But this all fits a pattern of why everything is moving in a certain way, and what is moving and what is not. Here's Amazon. I mean, this didn't do anything. Here's one of the biggest companies. It still looks like it's in a head and shoulders. That's why I'm trying to tell you that basically there's a rotation. And a rotation means that certain stocks get out of favor. They're overbought. This is one of them probably, because it's not making a new high. It could, if it wanted, it could if people were still interested in it, but it's just kind of lounging around. It may not go anywhere for a while. It may even go down. Facebook is kind of a question mark. It still looks kind of head and shouldery, but on the other hand, it's still clinging to the underside of its uptrend. And, it's showing that it could make a new high here. It's not breaking down. That's a very long shoulder to make anyway. And so, again, Facebook is starting to look like a stock that's going up. I don't know why. Maybe they checked a few more facts. Maybe a couple more facts were actually right. I mean, that could have raised the value. I mean, they might be right every so often. Who knows? Now we got Google. This one, I've mentioned before, is having a pretty good pattern. Even though it broke down, the circle shows that it's right back up to its trend line. It sort of hovered underneath it, broke down, and all of a sudden decided to get more valuable. I'm not quite sure why this one as opposed to the other ones, but here you go. Oops, there's Google again. Anyway, Tesla, I've talked about that pattern as being one of the better patterns. It's one of the most hard to understand companies in terms of value. But right now, no one cares about value. Okay, that's irrelevant. Tesla sells for like $1 million per car sold, and the value is irrelevant. What is relevant, it's in a nice pattern. It's still got people's imagination, and the company actually does have some very interesting assets. It's still kind of suspicious in some ways. I don't really like it. I would never invest in it, but the people who own the Tesla cars absolutely swear by them. I don't know. I don't know why. But okay, now here's something interesting. The US dollar. Okay, now we're going to start getting at the meat of the action here. The US dollar has everything to do with inflation. Everything. Because inflation is the depreciation of the value of the dollar. So by definition, the dollar going down is inflationary. All right. Now, the dollar has been, relatively stable for a number of years. And all of a sudden, it's at the lower end of its range. It's about to break down. And I would say that this, again, is a sign that inflation is coming faster than we know and faster than we believe. And I'm telling you, it's not really something that is net positive at all. It may help stocks. It may help them go up because, after all, the stock price is a fractional share of a business. And so its value, goes up in dollars because they go down. That doesn't mean the business is more valuable. It just means that the dollar's less valuable. So that's really it. So you got to remember that the dollar is everything. And the lower the dollar, the more it gets hit, the harder it is for the Fed to actually issue more dollars and do some good, because now all of a sudden they're issuing something that nobody wants anymore. So, we're getting to that point where, the slippery slope is about to happen. All right, if we go on here again, this is a 10-year interest rates. These are the yields, okay? This is the 10-year yield of the treasuries. I've mentioned this before. It's going up. It's in an uptrend. It actually looks like it's got a lot of pressure to send it up in a very quick period of time. And also, again, I mentioned the low basis, coming up from, under 50 basis points now to about a point. That's a big rise in the 10-year rate on a percentage basis. That's going to hurt somebody. I don't know who yet, but somebody's going to be hurt by that. And the same thing with 30-year. 30-year, I mean, the 30-year now has traded almost back up to 2%. Yeah, big whoopee, 2%. 2% sucks. I mean, let's face it, it's a crummy rate of interest. But on the other hand, right now, to keep this rate as low as it is, the Fed is having to support it. The more money the Fed prints to support this, the more they're going to bring on more inflation. Inflation is simple. You produce a certain amount of goods, you have a certain amount of dollars, and if you print more dollars than the rate at which you produce more goods, you're going to have inflation. When you have something like a war, and you all of a sudden start printing money like crazy to buy all those bayonets and tanks and airplanes and everything they need, to make sure that the war machine is kept nice and oiled. Well, those don't produce any GDP, and basically you have a whole bunch of money printed for things that for things that destroy. So, that's inflationary right there. There's another thing that's inflationary. That's paying people not to work. That's called unemployment insurance. Oh, it sounds like a wonderful thing, but paying people not to work, guess what? They don't work. Pay me not to work, I won't work. Promise. Pay me more not to work, I promise to never work. Pay me to shut up? No chance. I'm never going to shut up. And I want you to know something else, too. I know all you women are after me. And you know what? I don't blame you. If I were a woman, I'd be all over myself. But that's besides the point. We're going to go on today. All right. There's a 10-year treasury. 30-year treasury. This thing is signaling inflation. And we're going to have a problem when some of the other countries like Japan and Germany that have negative rates, what the hell happens when their rates go positive? That's going to be something to behold. I don't know. I have no idea. But I can tell you this. It ain't going to be pretty. It ain't going to be pretty. It's going to be like mixing ammonia and bleach together and taking a big ol' whiff and getting a hydrochloric acid smell. All right. So here we go. This is gold. Gold, the metal. I have been bullish on gold. I continue to be bullish on gold. And the reason we have a 20-year chart here is to show you the kind of move that gold can have in a decade when it's in a commodity cycle. Now you look at this thing right here. It went from about 2003, 2011, about 8 years. It went to almost $2,000 from about $400. That was 5 times, the original rate. This time, it may be much, much more than that. I expect it to be much higher than that because when you look at the amount of debt that's being created to fund all these stimulus bills, so we get to stimulate people to pay them not to work with a flu that they don't really have. Gee, that is a phenomenal fiscal recipe for disaster. I'm glad we chose it. Anyway, gold is going to have a very major bull market. I wouldn't worry too much about the zigs and zags. It's inevitable. Bitcoin is another thing. Cryptocurrencies are also going up. I don't have anything about them here today. We will cover that topic because cryptos, believe it or not, they have value, and we know what they are. We're going to tell you what the hell they are. What are they? Why are they worth money? There's a very good reason. You're going to find out. This is silver. Silver's acting pretty good. I like silver. I continue to believe silver is actually this is the time to buy it. It's starting to move up a little bit. I really, at this point, do not believe that silver has a lot to go down. It's too much of this is fundamental. Silver producers are not producing anymore. It's a lot. Silver's a lot more, got more industrial use. There's a lot less of it outstanding. And it's easier to use as a coin. It's easier to use because it's worth less money. Gold's heavy. Gold's, worth a lot. It's hard to actually use a gold coin for anything other than holding onto the gold coin and buying and selling it. Now, so silver, real good. The miners. Now, these are the gold and silver miners. These have also held up really well. The companies that are actually mining gold and silver, they're telling us that there's strength in that sector. They kind of break down. They kind of don't. They fooled me a few times. But right now, I'm going to tell you, this is a low risk time to enter. Nobody's paying attention to what's going on. And this is a time I'd be looking at some of these. We'll get to some names here too. Copper is also, look at that. Copper is at a new high. Okay, copper is probably the main building material in houses and electricity and all sorts of things. And look at that, brand new high on copper. That tells you something as well, because the economy's not growing. Okay, it's not bigger than it was last year, but copper's selling for more because dollars are worth less. End of story. It's going to keep going up. You're going to keep watching it go up, and you're going to keep wondering what the hell's going on. That's what's going on. They're printing money. It's coming out of the woodwork, and it's starting to be spent on things. All right, palladium, pretty much in an uptrend. It's also it's a rare metal. It's actually become more valuable than gold. It used to sell at a discount to gold. This thing is probably going to go up too. Another place where we're seeing, a commodity. Platinum looks great. Here's a basically a wedge pattern in it. Platinum also is selling for less than gold. Not exactly sure why, but this is another commodity that is in a good pattern. The other one I wanted to mention, which I don't have a good chart on it here, but oil. We're going to see it in the groups, but oil is another commodity that, because it's denominated in dollars and the economy stinks and there's nobody using it, it's still going to go up. And that's the thing. It's the dollar going down that's going to drive it. It's not the fact that it's in demand. So these are a couple of the stocks I like that are the junior miners that are in great patterns. Here's one called Yamana Gold. And by the way, Yamana, anyway, never mind, Yamana. So this one is called Coeur d'Alene. And Coeur d'Alene is a silver miner. This thing is already almost at a new high. And, again, one of the reasons I like silver so much is companies like this that are not really strong companies, but they're holding in there. And these are very likely to have massive gains, multiples, 5 times, 6 times, 10 times. I just don't know. What I do know is we're in the beginning of a long bull market, and these things are going to get carried along with it and make more money. Simple as that. This is Ego. I love this one, Eldorado Gold. This one is almost at a new high. It's had some ups and downs. One to keep in mind, because again, it's holding with its trend line and it's making new highs. So that is a relatively strong company, one to keep an eye on. Finally, one called Seabridge. It actually broke out. This is a big gold holding company. And again, its relative strength is very good. That's why it's one to keep an eye on. Now we're going to go to the banks. Now the banks, what do I say about the banks? Other than the fact they're making me nuts, the banks basically decided in the last couple of days, post-election, that they were now all fine. Everything's good. They went up 10%, 12%. Why? I have no idea, is the truth, okay? But what I'm going to tell you is this, that I've said a healthy bank market is necessary, financial sector is necessary for a market to rally. That's true, and it's true right here too. Here's another sign that we don't know the reason. I don't know why these things are going up. I can't give you a good reason. But what I can tell you is the market is there. They had a hell of a move, and they're going to continue to go up and support the market to go higher. I have an explanation for it, but I don't know why the banks are going up. So, it could be that, inflation helps them because their liabilities are all denominated in dollars, or they may have a way of deflating their liabilities. That could be one possibility. I just don't know. But what I do know is when there's evidence, and you gotta listen to it. These are the broker dealers. Again, new high. I didn't think so. I thought these things were pretty much had it. Nope, wrong. Sorry. American Express looked like crap. Now look at that. Look at that move in American Express. What the hell? All of a sudden people start spending money on their credit cards? I don't know. But what I do know is that the market spoke. It was on heavy volume, and that regardless of whether I like it or not, and it fits into my worldview, it's what the market's telling me. So I got to accept it. And I do. I accept it. The financials have negated any possibility of what I viewed as a market top. So let's just throw that one away now. And, we're going to go on to what's really happening. Bank of America, again, another one. I have no idea what the hell happened here, but it just popped up, and it popped up a lot. Same with Berkshire Hathaway. This thing broke down. I mean, this thing broke down from a pattern, and then all of a sudden, just kaboom, decided to go up, and now all of a sudden it's broken out, and you have to pay respect to the fact that it no longer supports the bearish pattern for banks. Citigroup, not a great move, but again, still a move up. JP Morgan, again, I have no idea why, but here you go. And a breakout. Here we got Goldman Sachs. Not too long ago, it looked like it was breaking down. Now it's about to break out. This is an important company, and so it's a major plus. Morgan Stanley, same thing. New high on Morgan Stanley. That is telling you something that is good about the market and is giving it buoyancy. What it is, well, we shall see. Okay, so now I'm going to look at some of the sectors and how they're performing. And this is one called the biotech sector. These are the companies like Amgen that make new drugs. Again, looks like it's going to break out. The Dow Jones real estate index, real estate is breaking out. What is that telling you? With interest rates going up, it's telling you hard assets are starting to go up. Real estate is a hard asset. So real estate investment trust trades on dividends, which should compete with higher interest rates, but they're not. They're going up because the value of the land is going up, because inflation is going up and the dollar's going down. So that's where you got that. Now you've got drugs. This is called the DRG index. This is about to hit a new high. These are like big pharma, so they're all happy now with their vaccines. They're gonna make a nice new high and make sure and inoculate us against that bogeyman that we have going on out there. Now, this is the oil services index. These are the drillers. Here's opportunity, because all of a sudden we have a bullish descending wedge, and we have a bunch of companies that are about to break out. These companies are worth a lot of money. They pay great dividends. These companies could actually, this and the banks could lead the market higher. So, it all could be. And this is probably the most important component of the NASDAQ. This is the SOX, or the semiconductor index. And this one has hit a new high. So here we go. The NASDAQ is hitting new highs, barely. The most important parts are, and we are seeing sector after sector do that, including banking. Here's oil. Look at that. Descending wedge broke out all of a sudden. Why? The dollar must be going down. So here's the CAC Laurent. Now, this one, again, I find amazing, because I can't believe that the price of croissants just went up by that much in the last couple of days, but apparently it must have, because all of a sudden the French economy is doing well again. And this thing is broken out. And I didn't think it was going to. It was curling over. It looked like it was about to fall apart. But, basically what I think has happened, I'm about to kind of come to the close. So here we've got the German DAX. This thing, again, had a nice, looked like it was curling over, broke out. Looking good now. And the Nikkei, Japanese market, brand new high, multi-decade high. And that's amazing. A multi-decade high with all this stuff going on in the world. And finally, we've got the Nifty 50. This is the Indian market, made an all-time high. So you now have several markets that are coming back. The U.S. market, the world markets are all coming back. Now, here's what's important. We are not yet at a point of hyperinflation, but inflation is helping stocks higher, and it will, up to a point. Once interest rates get too high, okay, we're going to have some trouble, because they will compete with other investments. And so you want to be really careful. We're not at a point of hyperinflation, but we have so much debt. We have a $3 trillion budget deficit, more stimulus coming, and less production. How is it possible not to have a multiple gain in prices, in the level of prices? A banana's 30 cents now. It's going to be $3 in not too long a period of time, because there's going to be all this money floating around, ready to buy bananas. And that's the way these things work. So now's the time to start looking at things to protect yourself. We're going to have a whole lot on that coming up on the next episode. We love your emails. If you have any questions, please write in. You're absolutely welcome to. We're happy to answer them. Like and subscribe, please, because we do it for you. We try to bring you the absolute best in information that there is, so you will be informed, not misled. And we will see you on our next taping on Wednesday. Next Wednesday, we're going to see how this market is actually moving. Thanks, everybody. See you soon.